Hello and welcome to MLC's analysis of the 2016 federal budget. My name is Peter Hogan, Senior Technical Manager, MLC Technical Services. In considering what was and wasn't in this year's federal budget, I'll concentrate on three key areas. Firstly, superannuation. Tonight, the government announced a superannuation reform package which it believes will improve the sustainability, flexibility and integrity of the system. The Treasurer outlined key super contribution changes from 1 July 2017, including a reduced concessional contribution cap of $25,000 per annum, regardless of age, contribution catch-up opportunities for people with broken work patterns, and less than $500,000 in super. No work test for 65 to 74-year-olds who contribute to super. Tax deductions for super contributions regardless of employment status, and a super tax offset of up to $500 per annum for those earning up to $37,000. An important change that will apply immediately is the introduction of a lifetime cap of $500,000 on non-concessional contributions. This cap applies to all non-concessional contributions made on or after 1 July 2007. Other important super changes include the amount of super that can be transferred to pensions will be capped at $1.6 million. Existing pensions above this limit will need to be reduced to $1.6 million by 1 July 2017. Earnings in a transition to retirement pension account will be taxed at 15%, and the additional 15% tax on concessional contributions will be paid by people earning $250,000 or more. Next, personal taxation. Significant new personal tax measures were also announced, including the 32.5% tax rate will apply to incomes up to $87,000 from 1 July 2016. And a tax offset of $540 will be available when making super contributions for spouses earning up to $37,000. For small business changes, as widely reported, the company tax rate will be cut to 27.5% in 2016-17 for businesses with a turnover of less than $10 million. It's intended that this reduced rate will eventually apply to businesses with turnovers of up to $1 billion over a 6-year period. The tax rate will then be further reduced to 25% over the next 3 years for all companies. Also, the turnover threshold for the small entity tax concessions will increase from $2 million to $10 million from 1 July 2016. But the turnover test for eligibility for small business CGT concessions will remain at $2 million. And lastly, what wasn't in the budget? As anticipated, no changes were announced in relation to gearing in super, negative gearing in property, capital gains tax discounts, or additional age pension changes. Remember, these changes are proposals only and may or may not be made law. For more commentary on the federal budget, go to mlc.com.au.